they can trust.
And you're welcome back at 6:46. Now, over the last couple of years, we've seen a number of trophy property assets changing hands, be it well-known hotels or office blocks. Well, now it's a turn on the retail sector to see property come on the market. This morning, 6 shopping centres around the country are being put up for sale by the British bank Lloyds, which is exiting Ireland. The portfolio is called the Spectrum Portfolio, and the sales are being handled by Savills, whose chairman, Larry Brennan, joins me on the line now. Larry, very good morning. Good to talk to you as always. What's in the portfolio and how much will it cost?
Good morning, Ian. We've got 6 retail assets spread across the country, a major shopping centre scheme in Cork, which is Douglas Court. We've got 3 suburban schemes around Dublin, in Dunleary, Bloomfields, Clondalk and the Mill, and Kilbarrack Shopping Centre to the north of the city. A very major retail park in Dundalk, a town centre scheme in Sligo, and some government-led offices in Clondalkin as well. So quite an extensive and far-reaching portfolio.
How much will a buyer have to lay out for this?
Well, currently we've gone out to the market at a pricing level of €120 million, which reflects the income levels, which are currently running around €11 million per annum.
We've seen over the last while retail sales have rebounded a little bit, but I suppose the recovery is still fragile, and always retail sales are volatile. You can have movements every now and then depending on what's happening. But is this I suppose this a sign of perhaps retail is coming back a bit, that a bank is putting an entire portfolio up for grabs?
Yeah, well, I guess we have to look at indicators in the retail market, and they are positive, whether it be national retail sales, consumer confidence, employment levels are strong. So that's all encouraging and very, very much moving in the right direction in terms of the confidence in the retail economy.
We've seen foreign investors snap up every type of asset. If you've got an office block in central Dublin, they'll take your hands off to get it, or if you've got a trophy hotel around the country, they're quite attractive. But is retail attractive to a foreign buyer?
Yeah, I think this is the second major retail offering that has come around this year, with the earlier sale of the Acorn portfolio, and that certainly attracted international interest. I suppose part of our logic in terms of grouping the assets into a portfolio is to create scale, because scale is very much what the international market wants. So, I think this is a case where hopefully we'll see blended buyers, which is what we're traditionally seeing in the market, or what we have been seeing in the market, which is Irish expertise blending with international capital to come up with a strong buyer list.
How are these properties doing? Are there many tenants in them, or are there many vacancies?
No, pretty much. Again, the occupancy levels are very high. I think, again, in Cork, a lot of our Cork, or your Cork listeners will know Douglas Court very, very well. Extremely well, long-established suburban scheme, well-liked, and, strong footfall levels. Likewise, like the Dundalk, has an excellent tenant lineup. Heaton's, Woody's DIY, and again, a fully let scheme with one transaction ongoing. But yeah, really strong assets.
Is there much room for development on these centres, or do they require much investment?
Well, I think that's also part of the angle, and part of what we built into the pricing is the opportunity side. Certainly in Dundalk, there's a considerable amount of land. There's also development opportunities in Cork. So yes, there are asset management plays and development plays which add to the value.
And looking at the future for retail, do you think we'll see more banks put properties on the market, or is this because Lloyds they want out of Ireland? We know that's happening.
Well, I think there are more assets there, either enforced in receivership that will come to the market, and other sales. I think it's been well commented on. So no, I think there will be followed by more retail sales. But that said, this portfolio stands on its own. The thing about retail, I guess, every asset has to be considered in their own right. These are all in strong markets, strong consumer areas, so yeah, they very much stand on their own.
And finally, Larry, the cost of this portfolio, 120 million is what you're guiding. How much would this have set me back in the boom years?
What we're working to is an income yield there of 9%, which, if you look at retail averages, would be well above retail averages. So yes, I would have thought there's considerable potential here in terms of compressing that yield and seeing growth into the future.
OK, Larry Brennan, Chairman of Savills Ireland, thank you very much for joining us this morning. There you go. Do you want to own a shopping centre portfolio? It'll set you back 120 million minimum. Let us know your views. 53106 is the number for your text.